Okay, we are live. Today is going to be a special Hymns Weekly episode because we're going to be talking about our Q4 earnings predictions. And yeah, it's going to be a fun episode. There's a lot to talk about.
Give me just 20 seconds to change the Wi-Fi. I forgot about it.
Sure. Let me go here and see who is in our chat. I got all of my earnings numbers. I don't have clean guidance numbers. I was planning on recording a video after this around my earnings predictions, but I have all the numbers except for guidance, which I'm just going to finish up right now on this call. But I think there's other stuff for us to talk about as well in terms of analysts, the stock, which has been moving quite a bit. The market just closed and it's only down 3% now after it fell down like 11%. So I think it's an interesting time going into earnings. I was thinking it was going to fall much more than this, but yeah, it's keeping up its strength.
Yeah, I mean, insane recovery. Usually when we have like a downgrade from Bank of America or something, it's like minus 15 or 20%. But I mean, last time it was in the day of the Amazon's news, so it all made the perfect timing for them to downgrade the stock. But I mean, the downgrade itself is based on the GLP-1 contribution becoming larger and larger. Okay, we all know about it, but I don't know if you saw, but they gave like a huge estimate for the first quarter of 2025 revenue. Have you seen it?
For their next,
Yeah, they downgraded the stock,
Bank
but
of
they said
America.
yeah, they downgraded the stock, but they said that according to the data that they saw from Bloomberg, the first quarter revenue could be between $551 million and 574, which is way above analysts' estimates. So they downgraded, but they are pointing to a huge beat in the first quarter.
Do you want to pull up the report? Do you have the report up?
I sent you an image like on X,
I can pull it up.
which is exactly what I'm reading right now.
Can you double check your mic for me to see if you have the right mic on StreamYard? You can just go in settings.
What about now?
I mean, it works. Okay. So I'm going to pull up the article. So this is what you're referring to, right?
Give me just 1 second. The microphone is wrong. Yeah. What about now? Is it better?
Much better.
Is it perfect right like this, or do you need to?
It's perfect, dude.
Okay, sorry.
Okay, so here we go. Bank of America research. They're basically saying here that as a result of GLP-1s, GLP-1 sales, that Hims is going to be crushing it in the next quarter. Is this correct?
Yeah, they're saying that GLP-1s are becoming a larger and larger portion of revenue, and they expect that in the second quarter, it will be like 50% of revenue. And because of that, they expect a huge deceleration in the second half of the year. And with that, like a multiples contraction, basically.
So are we attributing any of this to the Super Bowl? Because, of course, this is not going to be in the latest numbers, but it will be in the numbers that Bank of America is talking about.
I mean, we will know about at least the guidance. So the first quarter of the year, we will have at least some color from Hims, and it's what they're guiding. They said the GLP-1s could be like 50% in the second quarter, but they didn't give like an estimate for the quarter, just for the first one, based on the data from Bloomberg's second measure. I'm not sure. I think it's about credit cards or something like that.
Yeah. And we've been seeing some very positive credit card data and just leading indicators for Hims in general. So that's gonna be fun. People are talking about all of your holdings, man. You got high tide questions, you got the NBIS questions here. You have a fan following, my friend.
I
Uh,
mean, I can't complain. I'm up like 40% year to date or something like that.
Amazing. That's fantastic. I want to, and maybe we can talk about it offline, but I want to have you in one of the stock tank episodes, basically making a full bull case for high tide or Nebius or whatever else that you want to talk about. I think that could be a really good episode for people because there's still names that are not like super prime time yet, but I want
Yeah,
to
like
learn more about them.
Nebius has no analysts covering them. The
Yeah.
questions they were like answering today was the earnings report, and
Hmm.
it was down like 14%, and it's now up like 5 or 6. It was an insane recovery because I
Hmm.
mean they missed. They didn't miss because there were no estimates, but they missed their own guidance for the fourth quarter because of some delays in the sales and marketing team that they're establishing, because it's a very recent company, because like it came from Yandex, which was the Russian Google.
The Russian Google,
Like
yeah.
the European assets got separated from the Russian assets, and they started, like, the engineers run away from Russia and started a new company essentially. But they're still in the process of doing all that, and because of that, the fourth quarter revenue was way below what they expected. But the full year is like the midterm expectations are even better right now. So
Yeah.
the market understood that and recovered, but they just don't have coverage. I'm expecting that to be a huge catalyst. They have just one analyst, which is like from BWS Financial. I never heard of them
Hmm.
before this. So I think, like, and Goldman Sachs um arranged the conference call. So I think they should, like, get some coverage at least in the near future.
I'm just as you're talking, I'm looking at Celsius because they're reporting earnings after hours, and we might be getting some big news because I think they're going to be buying a competitor along.
Today,
Yeah,
are you? It's down 7% after hours.
yeah, but that doesn't really matter because the numbers are not out yet.
Ah, okay. So you're long Celsius?
Not really. I just bought some calls um, just for fun. It's like super micro position. Anyways, I do want to talk about hymns and the earnings that we have coming up. We're going to be live streaming those earnings on Tuesday. Is this correct? You're going to be
Yeah,
able to live stream them with me
but the earnings are on Monday, right?
whenever the 24th is.
Yeah, it's are on Monday.
We're going to be live streaming those earnings on Monday.
Yeah, the thing is, I really wanted to do it, but I'm not sure if I'll be able to. I have to confirm you later, because I'm going to interview the CEO of iTide.
That's
Uh,
that's
yeah,
amazing.
yeah, and because he's coming to Portugal to, I mean, yeah, some business related stuff, and I arranged with him, and I'm not sure if it will be at that time, but there's a high chance of that. But anyways, I'll try to, like, at least be able to, like, comment the earnings call or something like that, or even listen to it, because I'm really not sure about the timing yet. But I think it will be a bit hard, which is a shame because IM's earnings days are like the best earnings days ever. It's always like so much stuff to talk about. It's
Well, I
crazy.
mean, you don't get to interview a CEO every day,
Yeah,
so
exactly. It's a
if
huge
there is any
opportunity.
reason, if there's any reason to miss it, I would say that's a
Exactly.
good one.
That's the number one reason.
Where are you
After
going to interview him?
in Portugal, actually, like in a we're going to meet, like, in a meeting room.
Yeah, but
I'm
like,
still,
how are you gonna post it? Are you gonna do a video or what?
yeah, I'm trying to get, because I was initially going to rent a studio and make it like all very professional.
Mm-hmm.
I had already, like, scheduled it more or less with the guys, but now, like, his schedule is like very limited in terms of time because he has to go to several places in Portugal, and it will be like a lot of time on the road. So we will have to meet in a different place, and so now I'm trying to get like a videographer or something like that to help me. I'm not sure if I'm going to be able to. If not, I just like I interview him and I chat a bit with him, which is still huge and a very nice opportunity. And I make like a written interview or something like that. But I'm really trying to find someone to help me with like recording and all that.
I think you can do it with like fairly low equipment. You can just do it with like iPhones and stuff. Like I'm
Yeah, I
recording
just didn't
on my
want
iPhone.
to do it like with low quality. You understand? Like, but it's
Yeah,
better than nothing. I mean,
I would say that yeah, it's good because it just gives people more exposure to hearing from the CEO himself around, hey, here's what I'm excited about. Here's what like telling me more about the company.
yeah, I would rather prefer if I was a listener as well.
That's very cool though. All right, let's jump into some of the numbers. Does that sound good?
Yeah.
Okay, I have them all on like a spreadsheet basically, but how do you want to start? Do you want to start off with members and then we can work our way down to the financials?
I mean, as you prefer. Sounds good.
Yeah, let's let's do that. Okay, so members, I have it here broken out, personalized and non-personalized, and then I have total subscribers. Um, what do you want to start with?
I mean, in terms of percentage of personalized subscribers,
Hmm.
we have been increasing more and more each quarter. Like last quarter was the quarter where we jumped more percentage points.
Hmm.
We jumped from 42.1% to 50.5%. So it
Hmm.
was like 8.4% increase. So I think with according to this trend, and I believe it will continue to be like this, we should probably get to 60% personalized subscribers,
Right.
probably around that, I would say.
So you think that by next, you think by 2025, 60%. You don't think by next quarter.
No, like fourth quarter.
Oh, you think next quarter, 60%.
Yeah, because in the third quarter was 50.5. So to
Yeah.
jump to 60% would be a 9.5%. And I mean, last quarter, it was the best increase and it was 8.4%. And I think we will beat that because right now, as they said in the earnings call, all subscribers are like choosing a personalized subscription because now they
Yeah.
have essentially personalized options in probably all of the treatments or most of them. So I mean, and
Mhm.
it's the same price. So it's simply not like it's stupid not to choose it, I would say.
Right. Yeah, I have it here as like 56% of based on my, projected numbers. um, so I think we're pretty in line. I think you have it like, more a little bit more aggressive. What did you have for your actual numbers for personalized and not personalized?
I have to do the percentage because I had around like between 2.25 and 2.30 subscribers million. So I would say like 1.3, 1.4 personalized, 1.35,
Really?
let's say.
I had 1.26 um, for personalized, and I had 998 for non-personalized because non-personalized has been falling every single quarter. Like you can see here, the last 3 quarters have been falling. So I just continued that trend for the same reasons that you've
Yeah, yeah.
highlighted. It's the same really price. It's the same value proposition. Um,
My estimates also point to a decrease in the non-personalized.
yeah,
So
I think you just had a much higher number in personalized than I
yeah,
did. So I had 1.26 here. So I had so this green bar for next quarter I had as 1261, and then your number was what was it, 1300 something?
yeah, like 1350, something like that.
1350. And so then what is your
But
total?
I had like a range, so it could be like just
Okay.
1300 or just a bit above.
Which would be crazy because that would be like 30% quarter over quarter increase, which is not actually, that's not that crazy at all because
Exactly. Just look at the last quarter. Yeah, exactly.
um,
And now weight loss solutions, I think all of them are personalized, and with the increasingly high contribution of both GLP-1s and the oral solution, that's why I'm betting on that.
yeah, I think I need to increase my number actually because I have the last 3 quarters have 30% quarter over quarter growth rate consistently. So from 602 to 785 is,
Yeah,
31%, and then this is 30%. And then what I have right now for my growth rate is 22%, which assumes a slower growth rate quarter over quarter,
I mean
which
it's
I don't,
still very good,
it's,
but
yeah, but I don't know that that will be the case. Like, I think that they can, keep hitting those same, uh, or even have like a gradual sort of decline, right? So let me actually, here, I'll share with you and I don't want to share this whole thing because I want to make a video about this a little bit later. But this is essentially what I had for subscribers. Let me throw it up on screen. Like this is essentially, what I had for subscribers. I had 998 here, and then I had 1261 to bring me to my
yeah,
total.
so like 2.25 total, yeah. 2.26.
Exactly.
I mean it would be good as well.
Yeah. So I don't well,
Last time I think we actually predicted more subscribers than him's posted like last quarter. We guessed like our guess was an increase larger than what happened, and it was still in like crazy like the quarter.
yeah.
So
Yeah. So I think anything within that range, I have to revisit these numbers, I think, after, we chat and see if like it still makes sense. But I wouldn't be
yeah, because
surprised.
I think your approach was like you tried to predict the growth of personalized and non-personalized, and I went like I tried to predict the total, and then I tried to predict the percentage of personalized, and that's how I got to my values.
Yeah. I think if you put the total number for subscribers, it's still within the range. It's actually even a little bit of acceleration because if you look at the like quarterly, growth rate for total subscribers, it's about 9 to 10% increase quarter over quarter. And so my number of 2.25 million members by Q4 falls perfectly within that. It's just I think you have a much higher, like you have a
I
higher
have a
percentage of
slight
personalized.
acceleration. Yeah.
So my percentage of personalized is 55, yours is 60%. And that's the difference that we're drawing there.
Yeah.
Cool. But yeah, I think this is what people really want to know. And I'm sure we can get to this at the end. I'll just bookmark it. I think that we both recognize that non-personalized is going to fall. We both recognize that there's really no massive utility in non-personalized because the company is not going to be promoting non-personalized, and they're going to be trying to increase personalized more and more because that's essentially their value proposition. Now, of course, this is not going to be reflective in the next quarter, but the acquisition that they just completed this week also pushes them in that direction of saying, okay, we want more personalized solutions. And so like it just makes so much sense for the non-personalized number to eventually go down, 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 down as the personalized number becomes the vast majority of their subscribers.
Yeah, and Andrew said that he expects like to the personalized subscribers to be like 90% plus in a not so distant future. So
Right.
sooner or later, the the non-personalized subscribers will be like 200,000, sorry.
Right.
Something
Right.
like that.
Did you break out the 30-day versus the multi 30-day?
I have here the numbers of like the historical in percentage and all that, but I didn't predicted anything.
That doesn't really matter. It's not like a
It's like
huge.
every quarter for the past like 4 quarters or 5 or 6
Mhm,
or even 7 or 8, like the average
mhm,
each quarter, the average is like an increase of 2%. So last quarter was 86.8% were multi 30-day subscribers.
mm.
So now probably like add 2% to that or even a bit more because of GLP-1s, because it's really like more affordable on the when we talk about GLP-1s, it's even more affordable to buy the 12 months instead of just 1 or 3 or 6 months. So I would say that the GLP-1 subscribers are more likely to be multi 30-day subscribers than the
Yeah,
regular one. So
yeah.
maybe we increase like 2.5% or 3%, like to 80, 89, 90.
So
I don't know.
80, 87.8, 89, or 88, let's say, is what I have for multi 30-day as a percentage of the total.
Yeah, I mean, as we get to the 90% range, it's harder to increase. Like,
And just for people who are following along, what we're talking about is we're talking about this number here on the left, the percentage of the subscribers that are multi 30-day subscribers versus single 30-day subscribers. So essentially, my number here is for next quarter is 1985, and then 274 is what I have up here for a total of 2.25, and and that would be about 88% multi 30-day subscribers relative to the single 30-day subscribers. Okay, do we want to jump down into revenue? We could just slide over here.
yeah,
What do you think for revenue for member? Let me start there actually, because that's an interesting number.
revenue per member.
Yeah, 67 was where it came in last quarter. It was kind of outside the trend line. So I
Yeah,
really
it's
wanted to
because
start
of
there.
GLP-1 subscribers. I mean, it will go up inevitably, and they will stop reporting it. You remember from the earnings call, they said they will stop recording, like reporting after this quarter. This will be the last quarter we know about this.
Yeah. No, I know they're going to stop in 2025, but we're still going to get a number this time around.
Yeah.
So you think it's going to be higher or lower than 67?
Oh, higher for sure. I mean, the GL there, even if you have the discounts of like being in the Navy and a professor or a nurse or whatever, the
Mm-hmm.
minimum you get like for GLP-1s is like $99 or $79, something like that, which is still higher than that.
Right.
So, and then you have the regular ones, which is way higher. So with
Yeah.
GLP-1s and even the regular weight loss solution, but now they decreased the price. So I think now it's like $69 or something like that. So that would be in line, but I guess at least $70 at least.
Yeah. 73 is what I put for the same exact reason. Like GLP-1s, I mean, they mentioned in their Q3 report that the reason why they saw that increase was as a result of GLP-1s. And so we can just extrapolate that trend outwards. Um, but yeah, it's going to be interesting, right? Because the more GLP-1s is not a core like part of their business, the more diversified it is, and the more that number is going to stabilize over time. But we won't be able to see it from an investor point of view because they're just not going to report it.
Yeah, but we kind of, I was thinking about that, and I mean we kind of have a way of trying to guess it afterwards. We just divide the online revenue per the number of subscribers, like
Well,
by
you
12.
I don't think that's going to be an exact science because you don't know how the subscribers breaks out across their product lines because each of their product lines have different price points. So I mean, yes,
Yeah, but you
you
have
can try and
that
make an
that
average.
that number is the average of monthly online revenue, so it doesn't really
Yeah,
matter.
but it would be nice if we could. I mean, I know we've talked about this before, but it would be nice if we could actually see the breakdown of the actual segments
Yeah.
themselves. How many subscribers are in GLP-1 products versus in skincare or all these other categories. Um, and then we can see the cross selling across that as well. But anyways, it doesn't. It's neither here nor there. What was I going to say on this? Something else.
Revenue.
Oh yeah, I was going to throw up this. The single 30-day would likely go high after Super Bowl. Yes, I agree, absolutely, because you have increased exposure. But at the same time, like Super Bowl is something that we're going to be talking about in 3 months from now when they report the next earnings, because it just happened like last week.
And we will not have information about. No, yeah, single 30 we will have. I was thinking about the revenue per subscriber.
Mm-hmm. Mm-hmm.
So
Okay.
Revenue,
yeah. So do you want to go first, or you want me to go first?
Go first.
Okay. So
I want to hear you.
Total revenue, I had 486, which would be a 20% quarter over quarter growth and 97.5% year over year. Analyst expectations right now are for 469, and management is guiding for 465 to 470. But you have to keep in mind, like the previous beats that they had are within, like generally for revenue, they beat by around 5% or so. And 486, which is the number that I put down for revenue, seems like it's really high, but they're going to have a stronger push into GLP-1s. They're getting more revenue per member, and it's only a 4% beat off of analyst numbers. So it's not like that crazy to imagine, because this company does have a history of consistently beating estimates, and they're already guiding for 90% year over year growth rate. So a 97% is not like crazy.
No, I have even higher number, so it's not crazy at all.
Okay.
I mean, I'm used to like getting crushed on IMS like on the positive side, so my expectations are a bit biased.
Yeah. So what's
But
your?
I had between 490 and 495 because
Oh
I
wow.
think
So I'm entirely out of your range at 486. You start your range at
it's not that far away. So, but I mean, I think we're going to beat like a bit more than what we used to, based on the credit card sales, which were also at least I remember seeing in the fourth quarter, were also like very nice. But I mean, I understand your points. What I think here, I think the beat will be even higher in the first quarter guidance. I think we
Mhm.
will beat the fourth quarter, like as you were saying, like a bit as usual. But I'm a bit more bullish than that. But then in the first quarter, I think, because the estimates in the first quarter are like 490 or something like that. Not even 500, I guess.
Yeah, we can jump to that. Well, do we have that number actually?
Yeah, just 1 second.
Oh yeah, fourth quarter estimates, you mean?
Yeah.
Yeah, yeah.
The first quarter of 2025, the estimates are 494. So
Where'd you get that?
I was checking on Yahoo Finance right now.
Oh, analyst estimates, you mean?
Yeah, analysts.
I was like, I don't think HIM's management gave guidance.
No.
No, yeah, for analyst estimates, yeah, it makes sense.
I'm saying like the guidance they will give will be like
Mhm.
a huge beat compared to these estimates, because IMS could even beat these estimates in the fourth quarter. Like 494 is really like not a lot, especially considering that it will be like the first quarter with almost every state GLP-1s, and with Super Bowl, like it's really not a lot. But I mean, when they had these estimates, to be fair, they didn't know IMS was going to advertise on Super Bowl, so I guess the estimates will like increase significantly.
Mhm.
But still, I mean, when they report on Monday, when you like check the earnings, you will see first quarter guidance versus 494 expected. So I think the beat will be, I think, to be honest, what will decide, like what will give the market like a direction, will be the magnitude of the beats in the first quarter guidance, because this huge run up was mostly driven by Super Bowl. I would say it was at least the starts. Then you
Mhm.
can argue that there were shorters covering and all that, but I would say that the initial push was from Super Bowl.
Mhm.
So they really have to like guide for a huge beat for the stock not to correct significantly.
Yeah. No, I don't disagree with that at all. Okay. That makes sense. I get where you're coming from. Did you split up online and wholesale revenue at all?
No, not at all.
Okay. I mean, it's basically going to be all online revenue. What did you put for gross margins? I'm actually curious to.
Yeah, I think gross margins are going to decrease
Yeah,
100%.
because of
I'm not
GLP-1s.
sure how much, but I would even say like maybe 77%.
I put 78. Nice. Okay, great. I'm not crazy. Because of GLP-1s, right? That's your
Yeah,
reasoning.
yeah. Of course.
Yeah, that makes sense. Okay, cool. Adjusted EBITDA. Did you do expenses? No.
No, I looked at adjusted EBITDA and they guided for 11. Like if you divide their high end of guidance, both in revenue and adjusted EBITDA, they
So
it
management
implies yeah, management exactly.
management is guiding for here. I'll go up here.
11.7%. Like if you divide the high
Yeah,
end, like the 55 per for 70, you get like 11.7%, which is so they're guiding for a decrease in margins, but they did the same last quarter. They also guided for a small decrease in margins. They're probably protecting themselves from the lower gross margins from GLP-1s. And I mean, it's really possible that they stagnate for a few quarters. I mean,
mhm, yeah,
the operating leverage over the past few years has been, I mean, absolutely crazy. So I had here like uh around 12%. So decreasing from 12.7% to like 12% more or less.
yeah. I had 12.1%,
So yeah.
and I had 59.1 million in adjusted EBITDA. I don't know what you had.
No, I just did the margin, but I mean it's just uh
Yeah,
multiplying.
it's a pretty easy
Yeah,
calculation.
let me see.
So I had them actually breaking out of their range for the adjusted EBITDA and
Oh, I have
actually
seen, how much did you say like in EBITDA?
59.1.
59.4. So nice.
Okay. So I guess we're pretty close on that number.
'Cause, your margin was slightly higher and your revenue slightly lower, so it kind of
Mhm.
compensated.
Yeah. But again, it comes off of the revenue estimate, right? So if you, depending on what your revenue is, then that's how you get to this number eventually.
Yeah, exactly.
Okay. Let's now jump into the net income lines. This is going to be an interesting one, I think. I think you can start this time around.
Yeah, to be honest, net income, I decided not to predict anything. I just predicted free cash flow and adjusted EBITDA because of all those like one-off things.
The one-off
Uh,
expense.
yeah, I mean, usually the earnings per share, and also because of buybacks and stock-based compensation, HIMS has like very high stock-based compensation.
Hmm.
uh, and like the buybacks will probably not offset it. But I mean, depends. It depends on how much they bought during the quarter, because I mean,
Yep.
now it's this run up was during the first quarter, so they might have bought during the fourth quarter a considerable amount of shares. But I don't think it will be enough to offset the stock based compensation because they really dilute a lot. Let's be fair.
Yep.
So usually they report in line, like the normalized earnings per share is like in line or slightly above. But what I
Hmm.
really care, I think it's free cash flow.
So I didn't do free cash flow. I'll let you do that. But first, I'll walk through my numbers for the bottom line, and I'll get your thoughts, and then we can jump to free cash flow. Okay.
Yeah.
So I put 47.7 million in net income, which would be around here ish. You got to keep in mind, guys, that the 75.6 was as a result of a tax benefit for Q3. So this is not like the real number. And if you actually you take that out, you would still see an acceleration. So 47.7 million is what I put, which would be a 9.8% net income margin. And that would come up to 22 cents of GAAP EPS. Analysts are expecting 16 cents of GAAP EPS. So I'm expecting a slightly bigger beat there. What do you think about those numbers?
How much is that number adjusted for the tax allowance? Do you know?
No. Did not adjust
Okay.
it for tax allowance.
Yeah, wait. Let me find it. Yeah, I'm seeing it. It's so the tax benefit was 60.8 million. So if you take that out, you kind of have a huge increase. Like it was 14.8 million. What number you said? Like for fourth quarter?
I said 47.
So that's like a triple. But I mean, it's possible because of the increase in free cash flow and all that, like in the prior quarters, because they have a lot of deferred revenue to recognize. I mean, it's not impossible, and I think that's because of the huge increase in the margin that you pointed. I'm not so sure if it's going to be that good because of also gross
It might
margins.
be a little high. What was your EPS without the tax benefit? What did it come out to? Like 11, I think, or
The EPS, I think it was 8 cents or 9 or 10. Not sure, but I think around that.
Yeah, so this would be like a doubling in the EPS essentially.
Yeah.
But again, like analysts are expecting 16 cents of EPS. So 16 cents of EPS, like if we just do the math on that, that comes up to
Yeah, that's true. I'm actually seeing in Yahoo they say the average is 21 cents. Maybe that's non-gap.
yeah, like 16 cents of EPS comes up to 36 million. So it would be a double. It would be a double basically from last quarter's numbers, anyways, based on just like meeting analyst expectations.
It's not that unrealistic, to be honest.
Yeah.
For free cash flow.
Yeah, let's jump there.
I mean, this huge increase in free cash flow has been because of GLP-1s. I mean, we have to recognize it because they get a lot of subscribers for like 12 months because of how cheaper it is, and they collect the cash like right away. And that's why we also have a huge increase in deferred revenue, because when they get the cash before handling the product, they have to recognize on the balance sheet a liability, which is deferred revenue. And that's why you have a huge increase over the past quarters. And with, again, the same reasoning, with GLP-1 becoming a larger portion of revenues, I think, I mean, we can really project like an increase in free cash flow margin, because I mean it's already at 20%, and that's insane. And even if that's the top, it's already insane. It's very good. I think it has some room to improve. But also the company also said that in these quarters, like during 2025, they want to keep spending on capex to improve the infrastructure and all that. So I pointed for like 21% free cash flow margins, so in line with prior quarter or slightly above, because of the larger contribution from GLP-1s. And that would put like between 100 and 105 million dollars in free cash flow, which is like almost a 10x. It's like a 9x from prior year.
That's insane. That's crazy.
But I mean, if you look quarter over quarter, it's like,
yeah, it's not that crazy. If you look
not that crazy, yeah.
But like they're increasing. They're doubling like every quarter.
I didn't even notice it was like a 9x increase. I'm just looking now at the first quarter of this year.
So my question to you was going to be exactly what Sagig asked. Is the cash balance going to be reflective of that acquisition? I think no. It's going to be the cash balance as of the end of the quarter, which does not.
Yeah,
like we're not going to find out. We're not going to find out the amount that they purchased. The at-home testing facility. We're not going to find that out this quarter. We're going to find that out next quarter.
Yeah, maybe they reveal it like during the earnings or even in the shareholders letter. But
Yeah,
yeah,
yeah.
the cash position will not.
So the
I mean,
cash
the cash position will be influenced by the acquisition of the 503B pharmacy. No, it was
yes.
completed during that quarter.
So we
But
will
I mean,
find
they
out
they also
that amount.
issued shares to partially finance that, and the acquisition value was really small. So
Yeah,
it
they
should.
gave us the acquisition value for that one.
Yeah, it was $30 million or
Yeah,
31,
yeah,
and I think 1/3 or 2/3 were with shares. So it's really not that relevant.
yeah. Do you think they're going to talk about the buybacks at all?
I mean, they'll say how many shares they bought, but I'm not sure if they're going to like initiate or expand the program. I I would probably not want
Yeah,
that to happen.
that would be wild if they expand the program at $60 a share
Yeah,
plus.
imagine like, oh, we're expanding to $300 million.
I mean,
We're
um,
still cheap. Buy the deep. Fuck Bank of America.
seriously, Bank of America.
Andrew just drops the mic.
I mean, at this point, I wouldn't even be shocked, man. Um,
I mean, they have free cash flow to do it, but I mean, there's
so
still much more, like many other good places to spend the cash.
yeah, let me jump here now. I'm curious to hear your guidance number. So we both expect them to come in higher than this range. Um, my number was 1.482, so almost 1.5 billion in terms of total revenue for the year. For guidance for 2025, I put a range of 65 to 70%, which would be about 2.45 to 2.5 billion in revenue. I'm curious to hear your thoughts. Like, do you think the revenue increase year over year is going to increase or decline?
To be honest, I didn't do anything about guidance because of the GLP-1 things. Like, we don't really know when the shortage will end.
Yeah, but they're
And
introducing new products in 2025 as well, right? You have to keep that in mind.
yeah, but I mean, if imagine with all what's happening, like the delays and all that, if they can have the full year with GLP-1s, it's way different than if they just can have like 2 quarters or even 3 quarters. It would be like a huge difference, and that's why I'm really like curious to see how are they going to give guidance, or if they give, imagine they could even say, oh, this time we're not going to give the full year guidance, we're just doing it quarter, like each quarter, because we don't know about it. I mean, or something like that. Or they say like, we expect 2.2 or 2.3 billion dollars, excluding GLP-1s, or like, imagine they can try to give guidance without GLP-1s because of how uncertain, like how uncertain is the shortage thing. I'm really like curious to see how they handle that, because they always try to, and in the past they've done this before, like trying to give estimates without including GLP-1s because of the uncertainty. And
Yeah.
I think here it's like I mean, we never had so much uncertainty,
Hmm.
like when talking about the full year revenue of 2025,
I
because
do. I do
I
think
would
though that
believe that the shortage would end in the second quarter. If you tell me you believe in the third quarter, I would believe as well. Even in the fourth quarter, with like 3 months ago, everyone was saying, "Oh, in January it's over. Oh, in February tops it's over." It's 20th of February, and it's like no one talks about the shortage anymore. Everyone say, "Yeah, it's going to an end," but we have nothing from the FDA. We have nothing from anything. Trump is delaying everything. Robert Kennedy Jr., yeah, he doesn't like GLP-1s, so it's not 100% good for him, but he's delaying a lot of things. So it's really, really uncertain, and that's why I didn't have any value.
hmm
But I think yours is reasonable, but I really don't like, analysts are like 2.1 or 2.2, no?
yeah, they're lower. They're lower than that range.
So yeah, I think it will be a bit, especially because of the first quarter, which we already know it will be a huge bit. but I'm not really sure. Imagine if GLP-1s are like in the full year, this
Mhm.
could be like a huge year, but that would also imply probably a very low growth in 2026. So I'm not really sure what I would like prefer here, like just have half a year with GLP-1s and half without, just not to have like a huge deceleration in the next year or something like that. But then you can also argue, and we can talk about this about the new products announced. They can like, if they can like very successfully uh, substitute the semaglutide customers with liraglutide and charge a bit less, I think that's a really key factor here. Even if the shortage decreases, the shortage ends,
Mhm.
if they're able to like secure a lot of the customers with liraglutide, which
Mhm.
is legal, completely legal, then I really think the beat, like your numbers could even be surpassed by a lot. But
Yeah.
that's a huge if. So that's why I didn't make anything for the full year guidance.
Yeah, it's going to be interesting for management, right? Because like, how conservative are they going to be with their estimates based on what they think is going to happen with the shortage? Number one, and number two, if they're planning on rolling out liraglutide and that's going to replace the existing demand for semaglutide, and they want to front run that shortage, then the numbers wouldn't even be all that changed, theoretically speaking. I think also that if they don't provide any guidance at all for the full year, that's going to tank the stock for sure.
Yeah, I agree with you. But if I think if they don't like, if they give guidance, I think they will be conservative because they're always conservative.
Right, right, right,
And
right.
if they are conservative, I don't see them as like likely to give a guidance like way above the analyst expectations, just to protect themselves. But when you think about it, they might just um, believe they really are going to surpass, and like imagine like 2.5, 2.6 billion dollars, something like that. And
Yeah.
they like, for example, the acquisition yesterday. Why did they announce the acquisition yesterday? And why not in the earnings report like next week, like they did with the 503B compounding pharmacy?
Hmm.
Like it was exactly in the like the earnings report. That's when
Hmm.
we found out. They can just trying to like um play with the shorters, let's say, and like give a good guidance. But that's really not the IMS thing. They're usually very conservative. But like I'm seeing since GLP-1s were introduced, I'm seeing like a different approach. They're not being that conservative anymore. I mean, just look at this quarter's guidance. Like they estimated like a 25% increase quarter
Hmm.
over quarter, which they have achieved that in the past, but they never guided for it. They usually only guided for like 10-15% quarter over quarter, and then reported like 20%. And we knew that they were going to do it. But now I think they're becoming less conservative and more pragmatic, also because the stock now has a lot more attention. So they really have to be better at managing expectations, which
Yeah.
is something that they've always done like very well. But here, even if I was in their skin, I wouldn't really know. I mean, obviously I would have more information, like they have, like they already know how much they sold in like almost 2 months in the year.
Mhm.
So they have much more information than we have. But the approach used here, it's very difficult to like to be in their skin right now.
Yeah, I understand. Um, I think that it's going to be interesting just to see them being conservative. I wonder also, with the stock appreciation being 200% year to date or something like that, 190% year to date, if they're thinking about potentially raising more money to go fund some bigger acquisition that they want to do.
No,
Because
I
it
don't think
provides more flexibility, right? Like, and again, that would be like a sort of like a dark horse type of pick, um, but
yeah, but
something on
who
the table.
who would they acquire?
Well, I don't know. I'm just saying, like, it's not like we had 503B compounding facilities or at home lab testing, even on our radar. So like they know what they want to acquire out there. And if they want to increase their growth rate, now all of a sudden they have way more flexibility for that financial manipulation because the stock price is so much higher.
Yeah, I understand the point, but I'm not really uh seeing that happening because they've like now done like 2 acquisitions in 3 months, which
Mhm.
is not really like usual for him. They're really like organic growth all the time. And to be honest, these acquisitions were not to grow, were more like complementary to the business. Like the
Mhm.
503B compounding pharmacy, like it's to integrate in the business. They're not going to compound medications to third party pharmacies, obviously. So it essentially brings no revenue directly, let's say. And
Mhm.
this at home lab testing is a really small company. Like they have like 6 employees. It's really a small business. I think the idea was to take advantage of the FDA cleared device, which is like good for the personalization and like a lot of advantages. And it's very complementary to the business, but it's not something to like boost the growth. You see, like it's more of trying to improve the value proposition and like improve retention rates rather
Mhm.
than trying to acquire customers like that. I think they prefer to spend the money that, imagine they're going, if they want to acquire a business just to acquire its customers, let's say. Because when you look at competitors, IMS as capable, like is the best one in terms of capabilities. There's not really a competitor with a different, at least that I know, of course, with a different capability that HIMS would like integrate on their side, if you understand what I mean. It's more
Mhm.
like, I think they would prefer to use that cash to fund like marketing or all those marketing expenses that they like brilliantly use to acquire customers rather than using an acquisition. But I mean, to use shares, I mean, when you acquire companies, is it's much easier to say, oh, we're going to pay a bit in shares, rather than saying, oh, here's a stock offering of $1 billion to fund marketing growth and all that. I understand that it's for investors. It would
Well,
be terrible to see the offering, and it would crash like 20 or 30%. So I don't
yeah.
expect them to do that anyways. But I mean, they're growing 100% with like their cash and free cash flow and with the money they have. So I'm
Yeah.
not really expecting a big acquisition, to be honest. I don't think it's Andrew's style.
Well, we don't know, right? Because like they've done multiple acquisitions, even like small acquisitions, even in the
Yeah,
last 6 months.
every time it's a very small acquisition.
Yeah,
Even
they
in the
do it on
past, like
purpose.
2 or 3 years ago, no, like 4 years ago or 5 years ago, they acquired a small brand in the UK for like pennies, and they never did anything with it. Probably, I was wondering, I was wondering if we might have some news on UK, because we talked about it a few months ago because of the LinkedIn job offer. You remember?
Mhm.
And we never touched on that afterwards. And they said that they wanted to increase significantly the business in the UK during this year. And I mean, maybe you will talk about it. I just remembered out of nowhere.
Yeah, like I feel that the last earnings call, there was a ton of questions, and management was pretty straightforward with the responses. Like I got a lot of information from that last Q&A. So I'm looking forward to seeing like what they are asked this time around, and what they are responding with. But yeah, man, like it's interesting, right? Because they acquired this like very small company for the at home, testing, and then they go up like 25%. They gain like 3 billion plus in market cap just on that news alone. I'm like,
Yeah, they reported it just to
keep the
burn the
acquisition.
short. Otherwise, they would wait for the earnings. But I
Oh.
mean, yeah, do it. Burn them.
I mean, what do you think short interest will come in at? Like, what do you think it is right now?
Yeah,
The last number we had was 33% at the end of January.
that's a very good question, and that's exactly the reason why I'm not like trimming more. Because from the last episode, I actually trimmed my position.
Yeah.
Because I mean, it was just
Yeah, of
too.
course.
I mean, with 600% gains, it's like my best winner ever. Like both in absolute gains and in relative gains in the time period. It's insane. So I really had to do it. But it
Mhm.
was just a small trim, like 15-16% of my shares. And I didn't trim more because of the short interest. Like if we
Yeah.
get like a huge report, we might go crazy. Like for instance, what's that like Applovin, the company,
Yeah.
like it's, and it was I see it as a similar case to IMS because it's like they were running up like crazy, but the
Yeah.
multiples weren't that high. And then
Yeah.
they crushed the estimates and they rose like 30% in a day or something like that. And I see it as kind of similar to HIMS, but HIMS is much more like is a much more shorted stock, and that's why it's much more difficult for that to happen because
Mhm.
shorters will like if HIMS like doesn't beat by like 20% estimates or so, I think like it will correct significantly. But I mean, I can see it increasing based on what happened with AppLovin and based on the short interest. And if we increase, we're like at $15 billion, man. If we get to
Yeah.
20 billion, it's S&P 500. Like I was pointing to like 2027 or 2026 last year, and now I mean we're literally we've never been closer.
Yeah. Yeah.
And then
Um,
if that happens, is like Palantir vibes. Like then it's like a snowball because and this is huge. Like,
well,
but
and
I
you,
didn't answer your question. I think the short interest will decrease, but I
well,
don't see it at
we can
like
jump. We can jump into this because we're. I mean, we're already talking about it. And I think that the valuation is like it's not relative to other things that have run as much as Hims has. Like the valuation is not even that crazy, man. Like if they're putting up, let's just say they're going to put up, 2.5 billion in guidance for 2025 full year revenue, and they're a 14 billion stock. Like it's not even that crazy.
yeah, and their margins are insane.
80%, and they're growing like 70% plus a year. Like
I mean,
it,
compare it with
compare it with
most
whatever you want. Yeah.
stocks. Yeah, I mean, I don't. I think it's somewhat close to fair value. I would say.
Yeah.
Uh,
Sure.
but I mean, with everything we've seen in the past year, it
Mhm.
could double from here, and it wouldn't be like. Of course, it would be crazy, but it wouldn't be by like easily. It wouldn't be one of the like most expensive stocks in the market, like by
Mhm.
any means.
Yeah, I think like it's very easy for people to say, "Oh, Hims is crazy because it's gone up so fast, and so
Yeah,
much." But if you look at the numbers, like you're still not at like super bubbly territory.
exactly. We were just seeing free cash flow. They might increase free cash flow 9 times versus last year in the first
Yeah,
quarter. And I mean, what drives a company's value? It's free cash flow in the end
yeah,
of the day. So
yeah,
when you look at it, Hims is up like last year 600%. I mean, that's less than free cash flow. So it's not that crazy.
so you can answer this, and then we can wrap up,
I mean, it's too hard to say.
right?
Too
Um,
hard to say. I think Hims, and I'm a really like as you know, I'm a bull. Obviously, I'm very early, and I love the company. But I think Hims is it's kind of difficult to predict because I really see a huge regulatory risk in Hims because I think we will have to monitor this as things continue to roll out. But if IMS gets to a size of like 10 million subscribers or $10 billion in revenue, something like that, the
mhm.
regulators will really, really, really like make things harder. I'm not saying that they will put HIMS out of business, but compounding and compounding medications was supposed to be something like for not a lot of people, let's
Mhm.
say. It's not like a generic medication, which is the like the purpose is to be available to everyone. compounding medications is like, imagine you want to put like a cream for something, but your skin can't handle it, and you want it in a chewing gum or something like that, or like to change the format or to change the dosages. But I mean, HIMS can always argue that the company is doing that for like to improve patient outcomes, which is totally understandable. And with healthcare moving towards the AI integration direction, it makes all the sense to like for compounding medications to be a big part of healthcare. And that's the, in my opinion, the bull case, and why IMS is not going out of business, because it really aligns with my vision of how healthcare will evolve. I think like in a few years, every patient should be personalized, let's say. Every treatment you have should be personalized based on your like personal issues and all that, like medical records, everything else. But to answer the question, I usually forecast IMS or try to make mental assumptions for like not 5 years, but just imagine, we can even do some quick math here. Imagine we do like $2.4 billion in 2025. How much do you think would be a reasonable compound compound annual growth rate until 2030?
I think like, I don't know, 35%.
35. I mean, maybe, but that's a bit.
What's 2030? Hold on. What's 2030? 2030 is 5 years, and they're putting up 90% this year, and they're gonna in 2024, and they're gonna be guiding.
Yeah, but I'm putting from 2025 year end until 2030. So imagine the base is 2.4 billion. Imagine they make 2.4 billion in 2025.
So you're thinking 26, 27, 28, 29, 30.
Yeah, exactly.
Okay. Yeah, maybe a little less.
Maybe like 20, 25, let's say.
Yeah, 25, 30, sure.
So 26, 27, 28, 29, 30. So we would have like $7.3 billion in 2030.
In revenue. Yeah.
So imagine if GLP-1s stop existing, which is what's supposed to happen. I would say the top, their guidance for a long term is like mid 70s gross margins and mid 20s adjusted EBITDA margin, and they have a very good conversion from EBITDA to free cash flow. So let's say they can have a 20% free cash flow margin. And
so hold on, let me give you a much easier calculation. If you just look on a price to sales basis, the company is 14.5 billion as
but I don't like to use price to sales.
Yeah, but I'm just giving you an idea, right? And they're doing 1.45 billion basically in full year revenue. So it's a 10x price to sales.
Yeah, the thing with price to sales is like it only works during bull markets.
Yeah, like, well, okay. We're going to be in a bull market until 2030.
I hope so. But I mean, I really don't use price to sales ratio. It really annoys me when people, like, not what you said. I mean, it makes perfect sense to make easier calculations like you said. But when people just say, oh, IMS is a 20 times price to sales ratio, easily look at Palantir. Oh, what? And like,
I'm just saying, if you keep that same coefficient.
Yeah, I understood. It makes perfect sense. I was just justifying why I don't.
It would be like a $75 billion company. Of course, that's not. But I'm just saying, like, that's the spread that the market is giving it today.
But let's just assume that on the $7.3 billion in revenue, they have like 20% free cash flow margin. That would put it close to $1.5 billion in free cash flow.
Mm-hmm.
What multiple would you find reasonable?
Can you repeat those numbers again?
$7.3 billion in revenue and $1.5 billion in free cash flow. I mean, the compound annual growth rate of the company in the past 10 years would be like very high. So it would be a impressive track record, high growth, huge margins. So
I don't know.
I would say even like we can be like, if we were like bear, we would say like 20 times, 15 times free cash flow, because I assume they will continue. I mean, it's a huge market. If it was a smaller market, I would definitely assume they would slow growth to like mid-teens or something like that. But it's pretty possible that they just continue to roll out new verticals and like to like acquire complementary businesses and all that. So let's say they even to be not bull. I mean, let's see a base case 25 times free cash flow.
Sure.
That would be like $37.5 billion, which is like not.
Just a little bit over double of where we are.
Yeah, today we close at 66.
Yeah,
Damn.
we're at 14.5 times 2, 29.
Yeah,
like 2.5 type of X.
and that's why I say that after this
$140
run up, which is, and we're being like, if we increase this growth rate to like 30 and free cash flow to 25 and the multiple to 30, we could push this to the 70 billions you were saying with the price of sales. And it will always depend on the market environment. But just doing like this, after the huge run up that the company had over the past 2 years, like 150 to 200% increase over the next 5 years, or even 4 if you consider that multiple as a forward one. It could be like a target for 2029, like beginning of the year. I mean, it would still be very good. But that's why I say that IMS, after this huge run up, IMS is still like very compelling like story in terms of long-term opportunity and all that. But it's not anymore the crazy cheap stock that it was when like a few months ago. That was the point of using like free cash flow and all that. Because I mean, yeah, if you use price to sales ratio, you can say that it's a 10x from here or a 100x from here. It's like healthcare system is $1 trillion industry.
Yeah, dude, I think you turned off a whole bunch of viewers because they're like $140. Like, we're gonna hit that by the end of the year.
Yeah, and I believe that. I was just trying to have like a, like, imagine we're like in a bear case. Imagine we're like in a bear case. We have to like be down to earth. But if we just put our most bullish assumptions, I would say even $200, $300, bring them. But I'm just trying to make everyone like understand that this is not like we're not paying 15 times free cash flow like we were paying like 3 months ago or 4 months ago. And it's really because of what everything I said about regulatory pressures and all that. That's why I see an increase, not an increase, but like a risk of modeling 5+ year expectations. And that's why I'm always trying to evaluate based on like the next 2 years multiples. And it's always difficult because IMS just crushes the estimates, and you're like valuing it at, oh, it's like 30 times my next year free cash flow estimates, and then it just like beats your estimates by 30%. So it was in fact trading at 20 times. It was even cheaper than you thought. So it's kind of hard to value IMS, man. It's just the stonks just keep going up.
That's the type of market that we're in. Okay, I think we can wrap up there. We will see you all on Monday at market close, where we will be live streaming HIM's Q4 earnings report, as well as their earnings call. And I say we very liberally here because I'm not sure if Manuel can make it or not. Hopefully you'll see both of us.
But I was thinking you can invite Roy because this time there's no penalty.
Yes, I definitely can.
He's I mean,
more than welcome.
At least in case I'm not available, you have like a partner to substitute me.
And if nobody is available, it's just me and Andrew.
I mean, ourselves. Sounds like a good duo.
Thanks everybody for watching. We'll see you in the next one.
Thanks, guys.